Welcome back to my channel. In this video, I wanted to cover a super investor by the name of Tom Lee. And Tom Lee is really all over CNBC and other YouTube shows. He has a lot to share, and at times he's been really on it. For example, some of his highlights, some of his positives. During COVID, when it was pretty scary to be an investor, he really called on investors to buy, and he was correct. The market did recover. And in the years where we had really good stock appreciation, he was also encouraging investors to buy. And I think that especially during the go-go years that we saw in 2023, 2024, I really appreciated what he was saying. Now in 2025, I'm far more careful. So I'm careful not to buy into too much of perma bulls comments. And more recently, Tom has his predictions, or I guess his observation of the market hasn't been totally correct, but he has been correct a lot. What I wanted to look at is his portfolio. He has a portfolio referred to as the granny shots portfolio. And it's a neat portfolio where he looks at obvious stocks that investors should hold. So that's the rationale of his portfolio. These are layups or granny shots. In basketball, a granny shot isn't a very sexy or preferred way of shooting a basketball from the free throw line. It's actually a little embarrassing. So players usually don't use it, but it's proven to be a more effective way of making a free throw. And his granny shots portfolio is supposed to be some stocks that are obviously going to do well. So I wanted to see if that particular portfolio in 2025 is performing well or if it's lagging the S&P. I'll also stack rank Tom Lee against other super investors. At this point, this will be the 15th super investor that I've looked at their portfolio on. And we'll see where Tom stacks up. Right now, his portfolio year to date is down more than 12%. And I'll go into detail on which stocks are doing well, which ones are his winners, and which ones are his losers. So let's take a look at Tom Lee's portfolio and his performance. Investors can easily buy into the Granny Shots ETF. Its symbol is GRNY, and it has assets of $826 million. The fund, all the holdings are listed, which I downloaded, and we'll be looking at the year-to-date performance on each. But the fund is not doing great. It's down 12.47 according to stock analysis. And I'll look at each individual stock and show you which ones are the best winners and losers in a bit. So overall, this is a ETF. The other note that I put out there is that you pay 0.75% in management fees. You know, one of the reasons why I really began to invest just as an individual stock investor and moved away from ETFs and mutual funds is, you know, early on, I was in mutual funds and ETFs just like everybody else. And I really tried to find funds that had low fees. And Vanguard really made a business out of providing choices, that good choices where you had very low management fees, because oftentimes portfolios don't perform and they underperform the overall S&P, and you have to pay a management fee. So it's like worse. You're not only not keeping up with the market, but you're paying somebody to underperform, which didn't feel right. That was one of the things that compelled me to really invest more time in my individual investing, really manage my own stocks. That way I can learn and over time become better. And I have no idea. Now, I'm a fan of Tom Lee. I like Tom Lee. But just as an example, I have no idea what this manager is thinking when they buy a particular stock. Would I agree with it or not agree with it? Well, I've taken that out of my portfolio of money that I've worked really hard over the last 30 plus years to accumulate and grow, that my family depends on. I make the decisions, and I really have the good background on that. So let's take a look at his winners and losers. So I've downloaded Tom Lee's fund and put it all on one sheet, and I'm looking at the performance based on where the stock traded last in 2024. So it truly is year-to-date performance of each stock. And the stocks that have the greatest, or I should say, are more of the fund, are the ones that have been doing well because they've accumulated value. They've appreciated in value. And the stocks that have done worst are toward the bottom. Looks like he has 35 different stocks, and he's put maybe 2.5% to 3% per stock, and let the stocks ride. His number one performer year to date is Palantir. So my good friend Shadow Guy will be happy that Palantir is a stock that Tom Lee thought was a granny shot. And I've been wrong on Palantir to this point. I have to admit and eat a little crow that Palantir has really worked. I can't get to their valuation using their free cash flows, but at this point, the market believes different and really likes Palantir. And so does Tom Lee. He's doing really well. The stock is up 24%, while a lot of other technology stocks have really struggled. So congratulations on that one, Tom Lee. His second best stock is Abbott Laboratories. This is a healthcare stock, and healthcare has been working. This is a lower growth healthcare company, but they're profitable. It's med device, it's not pure play pharmaceutical. So that was a good move on his part. That's really been a winner for him. Just to catch, the third best stock is Progressive Insurance. I'm buying into insurance stocks. I don't own Progressive. I own Allstate and also own Chubb. I think that's a good idea as well. So those are his winners. Now let's take a look at the ones that are struggling. Go toward the bottom of the sheet here. The number one struggler is Tesla. This is a granny shot that Tom Lee believes. And I think if you follow, I think the popularity or the popular perception, Tesla did have a lot of positive momentum toward the end of 2024. The whole story that, hey, Elon Musk is pretty much part of the White House staff and has a leadership position with that administration. But the stock has severely faded in 2025. And it's the biggest loser of the granny shots portfolio. It's down 40% year to date. Holy Toledo. That is a loser. The next one is Arista. Now, on Arista, I've reviewed Arista a few times on the channel and have commented that it was overpriced and felt that there were other alternatives in the cybersecurity software space that provided a better risk reward situation. I felt that other investments had its stock price below intrinsic value versus Arista Networks has really flourished for years and the stock price has really gotten high, much higher than its intrinsic value. But I think now the market's really correcting that stock price, and I don't see it going anywhere from here. So that's the second biggest loser of the portfolio. And the third biggest loser is PayPal. And PayPal, boy, I'm feeling that one. I own PayPal. So I'm right there with you, Tom Lee. I think PayPal is discounted, but the market just has not liked PayPal for about 3 years. It finds reasons to sell off that stock. And when it sells it off in a fury. And the last one I'll go number four is AMD. The semiconductor space has just really been beaten up. I've never really liked AMD. I've commented it a few times on my channel that they just don't produce consistent cash flow. And that's a problem for me since I depend on cash flow for intrinsic value valuations. Now, when we look at the performance of all those stocks year to date, they're actually doing about minus 11.43%, which is underperforming the S&P. And if you include the management fee that you would be paying FundStrat, you're actually down 12.18%. So again, it'd be one thing if you're paying a manager to manage your stocks and they just do better when they can consistently show that, you can do better. But to pay 0.75% for me is not the right thing. If you have a couple $1,000,000 invested, that's $15,000 a year that you never get back. And I'd rather keep that 15,000 and invest it. So that's how I roll. The S&P is at minus 10%. Now let's take a look at how he ranks against other super investors. Tom Lee ranks number 9 out of 15 super investors that I've reviewed. Number 1 right now is Guy Spear. Michael Burry is in second place. But Tom Lee is down number 9, just ahead of Bill Ackman. And just as in passing, I updated Bill Ackman's portfolio to include Uber and include Hertz, and which helped his portfolio a little bit, but not enough to make him rank much higher. So Tom Lee is right there with a lot of super investors around him, and the S&P is at minus 10.19. And that I put Tom Lee's the performance of the stocks that are in his portfolio. I didn't put the 0.75% management fee in there, but you can consider that on your own. Now, that's where he stacks up just quantitatively. Now, I get value from Tom Lee, and I get value from all these super investors, more value from some than others. So I wanted to rank Tom Lee on where is he in my favorites list, and does he provide me value and so forth. And I put Tom Lee in sixth place, underneath Howard Marks, Warren Buffett, Michael Burry, Einhorn, and Pat Dorsey. These investors, I think, are really generous with their wisdom, their knowledge, their portfolios are really interesting. And Tom Lee most definitely is very generous with his insight, observations of the market. There's some things I always learn something when I listen to Tom Lee, but most recently he's just a perma bull, and some of his comments are not what I agree with where the market is at or going. Just to be consistently optimistic that stocks are going to rally, hey, a rally's around the corner, that's just not productive for me this year. And that's why I put Tom in sixth place. But I do appreciate how generous he is with his comments and how often I could hear Tom Lee speak about his portfolio, what he's observing in the market. I think he has a lot of value to add this, the overall community of investors. So that's my review of Tom Lee. And love to hear your comments on Tom Lee, if you're a fan or not a fan, and where you rank Tom Lee in your favorites. That'd be interesting to see. So thanks for watching. I appreciate it. If you like content like this, become a member of the channel. It's easy to get signed up. It costs $10, $25, or $100, depending on the level of perks that you'd like to sign up for. You'll get a really nice directory of tools, the reference library of all the valuations I perform, updated each month, and you'll be invited to member-only calls and see member-only videos as well. So please consider it. It'd be great to have you as a member of the community. Thank you for watching, and good luck with your investments.